Good morning, traders. Sorry about the delay in getting started here. It's 8:05 a.m. Chicago time on Monday, the 3rd of April, 2023. Thanks for joining me today on episode number 2442. Sorry about the delay. Mondays are a little tougher. There's a lot more to do to prep for the week, so I tend to think I have time, but I don't. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here we go. The pre-market summary sheet from Convergent Trading shows that overall we've been kind of mixed. The Nasdaq is a very weak. Can be very much explained by this heat map here. These are for the S&P. I could actually switch it to the Nasdaq, but I won't because that'll be another thing I need to remember. But you can see today Tesla is off 3%. You know, the big players are off almost 1%. You know, Netflix, Meta, Microsoft, Google, Apple, Amazon. Those are all the big mega caps, and they're putting a cap on the Nasdaq. You look at energies though, high flying today. Not sure why these icons aren't showing up, but high flying today. Crude, if you haven't heard, has popped as high as 8% overnight on the open. The OPEC Plus meeting resulted in a surprise 1.1 million barrel cut in production, supply constraint, demand remaining the same, prices go up, basic macroeconomics. What's interesting here is that Russia had already cut 500,000 barrels, and all they're doing on an incremental basis, all they're doing is cutting an additional 600K. So it's not, seems overdone to me. It seems like we probably are likely to start working on the gap. We just opened in crude. We opened at 80.18, pushed to 80.26, and are now trading below the 80 handle, which is exactly what I expected. I expected some responsive selling on the open, and that's what's happening there. China's Kaikgen manufacturing PMI lower than expected. UBS to cut 30% of its workforce. 30% of its workforce, 36,000 jobs after Credit Suisse take over. They're just absorbing the bank and getting rid of everybody. Very bad for Switzerland. McDonald's set to announce layoffs this week. Tesla announces record deliveries following price cuts. So what's important this week? We have ISM manufacturing today. Just a quick preview because it's Monday. We have ISM manufacturing today. We have the RBA rate decision tomorrow. It's tomorrow Eastern time at 12:30 a.m. Balanced trade out of Germany at the Open tomorrow, at the German Open tomorrow, 2 a.m. Eastern, or about the open of the Treasuries. And then we have the JOLTS job openings, which is kind of an interesting number because the JOLTS job openings is for February, which is a very stale number, but it's still quite significant for the Fed. So we'll pay attention to that. That's tomorrow at 10 a.m. Eastern. Wednesday, we have balance of trade out of Canada and the U.S. at 8:30 Eastern. ISM non-manufacturing on Wednesday at 10, and balance trade out of Australia. Thursday, we have the unemployment rate and IV PMI out of Canada. And then Friday is the big one. Friday, we have non-farm payrolls, unemployment, productivity, all coming out at 8:30 Eastern on Friday. And it's Good Friday, so it's actually a holiday. So Friday is quite interesting in that the number comes out at 8:30 Eastern. The market remains open in the futures till 9:15 Eastern, 9:15 Eastern. So it's opening just long enough for traders to be able to hedge, trade, or whatever, speculate on the non-farm payroll numbers, and then it shuts down. Equities are completely closed that morning. So we're still going to be here on Friday morning for that number, and then it's a holiday, everything shuts down. So that's the outlook for the week. Don't forget, Friday's a holiday, it's a long weekend, okay? Again, crude is coming off. It was as high as 8%. It's been hovering around 6.5% from Friday's settlement, and it's still kind of trying to push lower as the percentage here, the percentage change keeps dropping. There's not much else incremental to talk about. Let's look at the S&P. A reminder again that it's Monday, and these numbers change every Monday. They're done over the weekend. They change, and you could see that based on last week's action, because we rallied so much, the rotations have compressed. The rotations have dropped. So 7.25 points in the S&P. What was it before? Let me look at my sheet. 7.5 really. And they've kind of dropped off. The NASDAQ normal rotation can be up to 26 points, 26 and a quarter points. The RTY has risen. The RTY is subject to the banking crisis much more than the others. And now it's subject to the crude oil pop much more than the others as well. The Dow 52 points is the edge of normal, and crude oil, which has dropped from about 40 cents per rotation on the edge, is now 28 cents. The S&P stats bounced overnight auction, 221,000 contracts traded, 100% of the inventory is below Friday's close / settlement, and only 14.75 points of range. This is kind of interesting given the crude move, right? The market's really not falling off because of crude or anything. It's kind of interesting. It's adding to my suspicion that crude is likely to kind of move back. Maybe not to settlement, the SOC or settlement from last Friday, but it doesn't look like the market's responding to that too much. So it's really hard to tell how this is going to impact inflation because energy is a component of that. The point of control, 41.33, much higher than I had expected on Friday. Here's what was expected on Friday. Let me remove my camera so I don't confuse you. This is from Friday's video. The expectation on Friday is a pullback of some sort and a push into the 41.10 and to 41.12 range. And that was far, far, far too modest. The expectation for me was for Friday to have maybe 30, 40 points on the day, and it ended up pushing a lot farther. Here's what we got Friday. So Friday, gap up, gap and go situation. You can see that from the very get-go, very quick pullback and a squeeze higher. This is a 30-minute chart. Here's what it looked like on the active chart, the detailed chart. Not much of a pullback, really. I anticipated a much better pullback than this. It opened at 40.90 and it could only get to 40.8850 before it started to kind of surf the RTH VWAP line. And just the rotation, the counter rotations were pretty slim. There was a couple of breakout and pullback setups on a trend in here, but they were very tough to hold in my opinion. Right now, I'm either, based on what I'm saying every morning or what I'm writing in the chat room, I'm either completely out of sync with the market, which happens, so I'm not in a flow state, or this market is just really jerky, and I'm very sensitive to making excuses for what I see, but I'm not seeing the setups very well. I identified this play here on Friday, this pullback to the zipper with a very clearly defined risk and a very clearly defined lean below there. What I would have wanted is to catch the break from here, but the setup was the pullback, and that managed after, I think a point and a half of heat or something, that managed to kind of pop higher. To me, it was really hard to kind of let go of the fact that we're trading in the 41.30 handle already. Remember, beginning of last week, I said that the market is really coiling near recent highs, and we are looking at that 41.60. I don't know who recalls. Tell me if you recall me saying that, 41.60, and here we are at 41.37, trading up here pretty quick with a weak structure below. So if we look at the TPO chart, it will show us what I'm talking about in terms of weak structure. This is weak structure right here. This is a pretty decent pullback on the nose right here. This is a pretty decent pullback on the nose, but it's kind of running ahead of itself. Very, very thin. You would expect the market, generally you'd want the market to push, and then the next day to push with an overlap, the next day to push with an overlap, push with an overlap, push. That's pretty strong structure. We've seen that in crude. Crude has had really good structure. Remember, I talked about this last week where I said, look, it opened here. It tried to pull back to close this gap, which again leaves us with weak structure, but it closed at highs. But the very next day, it opens and it trades a range. The next day, this is really good structure right here for crude. That's why I was telling you, crude is very likely to hurt shorts pretty badly, and it did. So we have very good structure in crude, not so much down here below the 72.50 handle with a gap and all of these singles here, but this is really excellent rally structure. You expect this to be quite sustainable, just like it was for the selling structure. You can see the selling structure is overlapping. That's very likely to continue when that happens. And now we have this gap against the high at 80, 60, 70, something like that. We pushed up against it. We went to 80, 20, 80 what in crude? I don't remember. It pushed pretty high, but it's staying inside, and it's kind of lingering. With crude, what it looks like to me is it has really tested the bottom side, this kind of unfair area, and has started to work itself back to the almighty 77 handle and has gapped through it. To me, this is incredibly weak structure here. And it's based on macro news. I get it. There's a supply constraint, but that's contingent on the OPEC members holding on and honoring that supply constraint. Part of that is Russia. Good luck with that. It's got to support a war. And so to me, that's in crude, it's kind of, it's not likely to hold. But we'll see. Hey, that's my expectation. That's what the technicals are telling me, but we'll see what happens. In the ES, what we have here so far today is a market that's unfortunately completely balanced in the overnight session, is holding on to the upper end of the range, but has used the settlement price as resistance so far. It's come up within a tick of settlement and has stopped, and it's got VWAP mid on top of each other within the vicinity of the point of control. Very likely to be a noisy open, but what it has not done is move away from these higher prices. So this is likely to continue to squeeze higher. Again, the big target up above is 41.60. Okay, so that's where we stand today. Rotation's quite muted overnight. There really hasn't been all that great a reaction. So the overall picture, when we look at the ES, is that it's quite bullish, very bullish here, but with weak structure. So, by the way, this is the kind of worst kind of market for day trading because it is, if you're looking to be an active day trader, this isn't a great market. This is a market where you look for pullbacks to predefined areas, and your entire effort is about catching a runner in the direction of the trend. So unless we have a strong leg down, in other words, a big, 2 or 3 sigma move down, close below, what you have here is a market that is in a grind, which causes volatility to drop, which causes rotations to drop, and it causes fewer opportunities. So I'm looking more and more at the NASDAQ right now as it's more fluid under those circumstances. Okay, hate to say it, but that's the way it is. NASDAQ doing exactly what we said and expected. Break higher and just run. This thing is really doing a good job running. We're left behind some key areas below the 12,900 handle or so. We've taken out the prior week's high at 13,000, and we are just running. The NASDAQ, you don't want to short that thing, even though it's weak this morning, relatively weak this morning. You don't want to short that thing until we get a massive impulse down. This is where I expect that opportunity will start coming back in, and the first opportunity really is this 13,100 to 1380 area. Right in here is the first pullback I'm anticipating. The NASDAQ settled near highs just like the S&P did. Remember, Friday was end of month, end of quarter. And Friday, by the way, very, very interesting. I posted this in the Convergent chat room. Look at Friday, S&P. So we have this push higher on Friday into the close, into the cash close. And what did we do? We sold off. And what you had is into the last hour of trading, after the cash closed, size was selling the heck out of the bids, just selling, and the bids were taking them. So this is just an interesting post-market divergence going on here. It looks like some sort of option hedging or something. But there was quite a lot of activity by the very large lots. They go from a zero line, they're basically zero lined all day long, to about negative 24,000 contracts net, 24,000 contracts down by the end of the session. That's the kind of thing I was warning about on Friday. Given the end of month, this is the kind of anomaly that we tend to see. This morning, we're looking at Delta being positive, but being positive on the back of small lots. Large lots are with them. So I'm very hesitant to sell this morning. Very large lots sold a little bit this morning, but nothing too significant yet. The 621 contracts are likely to be absorbed quite easily. But overall, I'd caution you from selling. I don't have any specific lines to draw on a chart or a plan or anything. Today is about sitting and watching and waiting for beginning of month flows and seeing how this crude thing plays out and how the market responds to it. So far, the response has been pretty poor. 14.75 points on 8%, an 8% increase in crude. Something's just not right. So just take your time and let the market kind of reveal which is the stronger hand before jumping in. Good luck. The market opens in 5 minutes. And don't forget to subscribe to the channel. There's a link at the top of your live chat. Please be sure to like the video so that others can find it. Good luck, and I'll catch you tomorrow morning. Take care.